Hey YouTube, this is Zach with Achilles Financial, and today we're going to be talking about Taiwan Semiconductor Manufacturing Company Ltd. This is a company that I did a brief video on this earlier last week, and I now want to do a longer form video talking about the fact that Warren Buffett's firm Berkshire Hathaway purchased more than 60 million shares of this stock in the third quarter. This is a stock that when I originally talked about it a few years ago, in the 2020 timeframe, we saw a monster run, and then we were able to follow up with it with one of its competitors in United Microelectronics, or UMC. So this is a company that has a lot to like about it. However, we just saw essentially a 30% increase in price over the past few weeks, coalescing or coming with when they announced that Warren Buffett had taken a large stake in the company. Now, this is a company who primarily produces a number of semiconductors and different chip making components of the product. That information is available here if you want to freeze it on the screen. But they do a lot of business with companies like Nvidia, AMD, and Apple is one of their key customers. Now, this past week, it's important to note that another large holding by Apple, or another large holding by Warren Buffett in the form of Apple, announced that they were going to be purchasing additional chips from a company that was making its chips in the state of Arizona, which is where TSM is planning on producing a new production plant for their shares of chips. Now, one of the reasons they're doing that is to repatriate a lot of that money for the US market. I say repatriate, but this is a Taiwanese company, but rather it is to bring that money into the US, protect some of that supply chain, and basically to form a better base for selling into the US market. Now, this is a company that's very popular because it is highly profitable. If you go into the valuation metrics here and look at profitability, you can see that they're currently producing at a gross profit margin of nearly 60%, and their net profit margin is more than 40%. So they are doing incredibly well. They also have an attractive dividend. If I come over here into the calendar, you can see how they're paying and when they're paying their dividend. And they do go ex-dividend here in about another 3 weeks. So this is the dividend amount that they are going to be paying. It's about 46 cents a share, and that's going to be paid out on January 12th. So it has a pretty strong dividend here at about 2.22%. It trades at a fairly attractive valuation of about 15 price to earnings ratio. And as such, I think that there's a lot to like about this company. In terms of overall fundamentals, in terms of what they're bringing in, this is a multi-billion-dollar company who, as you can see at the top of the screen, is continuing to increase overall revenue, which is already in the billions. It's already increasing on a year-by-year basis in the double-digit amounts. However, I do expect some of this to slow down in terms of overall growth, between hopefully inflation slowing down, as well as some of the pricing capabilities these semiconductor companies are able to demand will slow down in terms of as inventory eases and a supply chain constraints are opened up. That being said, as you can see here on the screen, the company is still growing very, very well. And if we scroll down, you're going to see that they're not just growing, but they're doing so in a very profitable manner. Now, as they continue to work up some of these additional factories, I expect some of that to decline. So the follow-up question here is, what do we expect to occur associated with what we've got here on the screen? Well, the benefit of a company like this is that they have some form of a monopolistic capability. They continue to be at the top of the game, so I think there's benefits there. However, I do still have concerns over the fact that the large portion of their revenue and production is based in Taiwan, which means that in the events that there is greater geopolitical risk between the US and China, between China and Taiwan, I would expect that to be negatively impacting TSM. The other thing that I would call out is a lot of tech has had a really big run up over the month of November. And I think that that could be a negative if we were to see some tax loss selling between now and the end of the year. That being said, if this is a company that you're planning on holding for an extended period of time, apparently Warren Buffett thinks something of it, or at least someone who is investing his money. And as such, I think that you can't go wrong with a company that's profitable, maintains pricing pressure, and continues to be able to grow. That being said, I'm by no means a financial advisor. I'm just some guy on YouTube. So let me know in the comments down below your thoughts on TSM, Warren Buffett, and if you have any stocks you want me to check out. Thanks for watching. Talk to you later.